Now let's take a look at the weather forecast for EMX. So we're looking for headwinds or tailwinds in terms of technical analysis patterns or the big macro picture in terms of total market valuations or the economy and other big picture factors that might affect EMX's probability of reaching our forecasts or their guidance, or in general developing the way we want to, but that is a little bit too vague to put into the actual forecasts. So first, let's take a look at the share price. As you can tell here, since the last 3-4 years, it moved in a sideways price channel between 2 and 3 Canadian dollars per share. Nothing much happening. It tried several times to break through the $3 Canadian dollar line for a long time, and it even made a false breakout downward below 2, which was completely inexplicable given what the company was doing, the partnership they had, the development of their largest royalty streaming contracts. So it was extremely cheap here. And also over this period, the company moved from being a cash flow consuming company to a cash flow generating company as some of their royalty streaming contracts grew and passed certain milestones, and still the stock wouldn't move. That meant that the company, which had promised to start distributing dividends once they got cash flow positive, they actually scrapped those plans, which rattled some people, but they did it because they thought that their own net asset value was so much higher, at least twice the current share price, the then current share price, that they scrapped the dividend, which is pretty gutsy, in order to buy back shares instead. So if you had confidence in management and you understood the company, then you realized that it was such a super bullish signal that they dared using cash to buy back shares and stop short of their promise to start distributing dividends when they got cash flow positive. It took some time, almost a year before the market finally realized what was happening. Also, of course, propelled by a stronger copper and gold price. But that in just a few months' time this year, in 2025, took the share price from about 250 to almost 450 in just a couple of months. So that looks like a breakthrough, an upside breakthrough for the company. The question then, of course, becomes, has it already gone too far, and are we looking at the short-term downside? Well, that can always happen, but let's take a look at some of the other TA and macro factors. So anyway, this looks like a clear breakout after some hesitation here. You can see a typical pattern of trying to break through, failure, trying again, and kind of a false failure before really taking off. So had you been around here after their promises, after scrapping the dividend and instead buying back shares and seeing how they were struggling with this resistance here, you should have been ready to buy with both hands once it started moving. So the last 50% upside here actually was pretty well signaled in TA terms. Then, if we zoom out a little bit, we can see how the COVID peak around 470 Canadian per share compared to the current 420. The 470 CAD could be a bit of a resistance. I mean, it's a previous peak. Is there any reason to expect hesitation once we get there? Well, in any case, there should be about a 10% upside before we get there, and have to ask ourselves that question. But that is also, of course, a typical point of possible resistance. And then we move over to the more general macro picture. So remember, what we're looking for are headwinds and tailwinds in terms of the economy, and in this case, metal prices. And as always, interest rates, inflation, geopolitical development. In general, I would say most of these are pointing in EMX's favor. We have rallying metal prices, increasing uncertainties in the world, which should be positive for the gold price. On the other hand, gold prices have already risen by a lot, and then there's always the risk of a correction downward, or a short-term correction downward. Just thinking again about this 2020 December share price peak of 4.70 compared to the current price of 420, since then the gold price has increased by about 2/3, so about 65%, and copper is also up by more than half since then. So that's a 50-55% price rise for copper since the previous share price peak. That means to me that all else equal, there should be at least a 50% upside to the last share price peak. That means that rather than 4.70 as the actual peak, even though of course it is the peak, right, in terms of nominal share prices, we should be able to consider maybe a 7.50 Canadian as the actual all else equal price peak. And that was before the Franco-Nevada Corporation and before seeing how some of their largest contracts, royalty streaming contracts were moving into a cash generation and seeing the potential there. So you have both much higher metal prices and an important strategic collaboration, and of course the 5 years growing of their own operations in terms of royalty streaming contract. So all of this more points to perhaps a 10 Canadian per share as the relevant comparison in terms of that previous peak, the peak that we are right now considering whether it might be a resistance for the share price. That means that combining these type of overall macro pictures, macro variables, and the more stringent technical perspective of a previous peak, that tells me that at least we do not have any concrete or tangible headwind or resistance or variables that should worry us in terms of how far this one can go. Then moving over to just the overall macro picture from a total market index point of view. This is the S&P 500 over the last couple of years, and we can see this sharp drop in the index in early 2025, which we have now more than recovered. Potentially it looks a little tired and peaky after this very intense bounce from 4,800 to 6,400. So that's a 33% rise in just a couple of months. It's but there's really nothing suggesting a downturn. It's just maybe a little bit of fear of heights here after such an intense bounce. And we, as always, the S&P 500 is still also extremely expensive on a price sales measure. However, as always, is this a magnet to the upside for the multiples, or is it a downside risk? Well, of course, it's both. But for our from our point right now, it's at least not a conclusive strong headwind, and that means that the total TA and macro summary, our weather forecast, is that there are no particular headwinds, at least. Although, of course, commodity prices could fall a bit, make a slight correction here from recent highs. That is a risk from the very short-term perspective. But otherwise, EMX has a green signal, go ahead from a technical and macro perspective.